Silver looks simple. That's why it wrecks so many people. Silver looks easy, cheap, friendly, almost harmless, and that's exactly why so many people get absolutely destroyed by it. The first time you watch silver rip higher in a single week, then give it all back faster than you can refresh your price app, it feels like the metal is trolling you. You stack, you wait, you get excited. Then boom, premiums, taxes, volatility, timing, and emotion all jump you at once. Or worse, you never had a plan to begin with. In this video, you're going to see why silver is not cheap gold. Why most people completely misunderstand how it actually moves, and how to build a simple, battle-tested strategy so the metal stops pushing you around and starts working for you long-term. By the end, you'll know the 5 biggest mistakes silver buyers make, how to dodge every one of them, and how to turn a confusing metal into a clear, strategic tool instead of a constant source of stress. Let's start with the belief that breaks almost everyone right out of the gate. Most people think silver is just gold's little brother. Same thing, just cheaper. That belief alone has cost people more money than almost anything else in precious metals. Silver is not cheap gold. It's a different animal entirely. Think of it like fighters. Gold is the heavyweight champ. Slow, controlled, defensive, built for long-term stability and reserves. Silver is the twitchy lightweight with knockout power and zero chill. Same ring, totally different fight. Silver moves faster. It swings harder. It overshoots. It fakes you out. And it reacts to things gold doesn't really care about. Supply chains, factories, technology demand, and manufacturing cycles. Gold mostly responds to fear, currency pressure, and central bank behavior. Silver has some of that, but it also lives in the real economy. Solar panels, electronics, medical equipment. Industrial demand that rises and falls with growth expectations. That split personality is why silver behaves the way it does. And if you walk into silver expecting gold-like stability, the market will teach you a very fast and very expensive lesson. This is where psychology kicks in. People buy silver expecting calm. They get chaos instead. A normal 15 or 20% pullback suddenly feels like something is wrong. Panic sets in. Doubt creeps in. And that usually happens at the exact wrong time. The people who survive silver and actually do well with it understand that volatility is not a bug. It's the feature. They size their positions so swings don't wreck their sleep. They expect sharp drops. They don't flinch when silver breathes. Now, once people finally accept that silver isn't cheap gold, they usually fall straight into the second trap. They turn the gold-silver ratio into a religion. You've seen the charts. When the ratio hits this number, silver has to explode. It feels scientific, like a law of nature. It's not. The gold-silver ratio is not a magic switch. It's not physics. It's context. Markets don't owe you symmetry. The ratio can stay extreme way longer than you expect. People wait for the perfect number, 80 to 1, 70 to 1, 60 to 1, and they freeze. Months go by, years go by, opportunities pass. A smarter way to use the ratio is as a tilt, not a trigger. When the ratio is historically high, you lean more towards silver over time. When it's historically low, you lean more toward gold. But you do it gradually, in stages, with rules. You don't shove all your money in at one magic level and pray. This keeps you moving forward instead of sitting on the sidelines staring at charts, waiting for perfection that never comes. Now let's talk about the mistake that quietly drains people without them even noticing. Ignoring friction. On paper, silver always looks cheap. The spot price feels low. The entry feels easy. But once you factor in reality, things change fast. Silver premiums matter more than gold premiums. Taxes matter more, shipping matters more, storage matters more. Silver is bulky, it's heavy, it takes up space. For the same dollar value, silver is physically much bigger than gold. That has real consequences. Higher shipping, more storage, more handling issues. If silver moves $2 in your favor, but your all-in cost barely changes because of premiums, tax, and spread, you're running on a treadmill. You're technically right, but you're not getting anywhere. This is how people lose enthusiasm. They buy random amounts at high premiums. They don't track taxes. They don't think about liquidity. Then they wonder why silver feels exhausting instead of empowering. This is why product selection matters so much. Well-known, liquid products with lower premiums matter. Chasing flashy designs with big markups turns silver into a hobby, not a strategy. Knowing your local tax rules matters more than most people want to admit. Silver rewards patience and scale. The smaller and more random your buys, the more friction eats you alive. Now let's move into the mistake that messes with people's heads the most. Expecting silver to move when gold moves. Gold starts breaking out, you get excited, you think silver is next. Then nothing happens. Days go by. Weeks go by. Silver barely moves. Frustration builds. Doubt creeps in. People sell or give up. And that is usually when silver finally wakes up. Silver almost always lags gold until it doesn't. And when it moves, it doesn't tiptoe, it sprints. This pattern repeats again and again. Long stretches of boredom. Then sudden, violent moves where silver tries to catch up all at once. If you don't understand that rhythm, you either sell too early or freeze when the spike finally hits. This is why silver is better treated as a momentum metal. You position early, you stay patient, and you decide ahead of time what you'll do when the move arrives. Which brings us to the mistake that destroys more gains than anything else. No exit plan. Silver rallies feel incredible. Your stack suddenly looks smart, confidence skyrockets, and then the reversal hits. If you don't already know what you're selling, how much, and roughly where, emotion takes over. Greed fights fear. Decisions get delayed. And the window closes. Some silver should be held long-term as monetary insurance. Some silver should be traded around those core holdings. If everything is never sell, or everything is sell everything, you don't have a strategy. You have reactions. The fix is simple but uncomfortable. You decide in advance which silver is core and which is tactical. Core silver stays put. Tactical silver gets trimmed into strength. You sell slices, not everything. You lock in wins while staying in the game. That way, when the pullback comes, and it always does, you're not replaying the moment in your head thinking, I should have done something. Now let's turn this into something you can actually use. First, define what silver is to you. Insurance, speculation, volatility, play, or a mix. Write it down. Your behavior has to match your answer. Second, decide your gold-silver balance using ranges, not magic numbers. Tilt gradually. Build over time. Third, attack friction. Track premiums. Know your taxes. Choose efficient products. Fourth, respect the lag. Silver doesn't owe you instant gratification. Fifth, write your exit logic on paper before emotions show up. Now let me make this real with a quick story. Two buyers, same metal, very different outcomes. Alex treats silver like cheap gold, buys randomly, pays high premiums, expects silver to follow gold instantly, gets frustrated, sells early, chases spikes, gets crushed by reversals. Jordan treats silver like the volatile tool it is, builds in stages, tracks costs, holds a core stack, trades a smaller slice. When silver spikes, she trims. When it drops, she's calm. Same market, different mindset, different plan. That's the shift you need to make. Silver isn't a lottery ticket. It's not gold. It's a powerful, emotional, momentum-driven metal that rewards respect and punishes laziness. Avoid these 5 mistakes, and silver stops being something that happens to you and becomes something you actually control. I want to hear your take. What did I miss, and what should we dig into next? Let me know in the comments. And if you're into gold and silver content like this, hit like, subscribe, and turn on the bell so you don't miss the next one. In the meantime, check out the video on your screen. See you next time.